So without further ado, I want to again say that we are very excited and introduce the great Darwin Green and Naomi Nemeth from HighGold Mining. Take it away, guys.
Well, thank you very much, Matt. Thank you for the intro, and thanks for everyone for tuning in. Naomi Nemeth is going to cover off some of the front end of this presentation, and I will cover off the back end. So I'll hand it over to you, Naomi.
Perfect. Good afternoon. Thanks again for joining us. I think we saw a lot of you literally a year ago. I think it was a year ago almost to the date before the world changed. So thank you again. And I hope you were able to follow our story during the year. So HighGold Mining is, we've been public about a year and a half now. We trade on Toronto, we trade on the OTC, and our projects and properties are in Alaska, the Johnson Tract project, and in Timmins, Ontario, a good location for a gold project. And what joins the two is the potential for very high grade gold. So where we are right now is we have a really good capital structure, only 54 million shares outstanding. We've raised 36 million Canadian in the year and a half we've been public. We have a spectacular shareholder roster, which we'll see on the next slide. We have 18 million Canadian cash in the bank and another 4 million Canadian coming in from warrants that will be exercised in September. Our management team is small and dedicated. We don't do a million things each. We are all dedicated to HighGold Mining. And as you'll see from some of our exploration results, we do indeed have top tier exploration assets. In terms of the shareholders, you can see the list here. They're pretty high profile shareholders in terms of institutions: Dynamic, Franklin, Merck, Century, Sprott. That's the Sprott fund in Carlsbad, Rick Rule's funds. And our management close associates include some high profile mining investors: Rob McEwen, John Tognetti is the principal at Haywood Securities, and John Robbins has had a number of successes with his discovery group. Our senior gold producer, while they don't like to see their name in print, they're very happy for us to mention them, is Agnico Eagle. They came in at our first financing. They stuck with us for 5%. And more recently, we've gotten analyst coverage from Cormark in Toronto. Brock Coulter-John actually made it to site last summer, which was great because not a lot of people were traveling. He came to site, got a good site visit report out. So if you're looking for some more information, very detailed on the Johnson Tract site in Alaska, we can send that to you. And for the warrants, we've got some warrants, as I said, some warrants coming in September that will bring us about 4 million Canadian cash, and a few other warrants expiring in 2023 and 2024. We financed at successively higher prices every time. So while we're taking a little bit of a dip now, we've done well with the financings. For the people involved in HighGold Mining, Darwin has both great technical experience as well as capital market savvy, and has a lot of experience with the type of deposit that we have in Alaska. So he can tell you a little bit more about his background, but suffice it to say that the combination of technical strength and market strength you don't find with every new exploration company. Ian Cunningham Dunlop is our VP Exploration. Again, well-seasoned guy, dedicated to high gold with lots of successful finds and projects in his past. And our board was handpicked by Darwin. Mike Cinnamon, the CFO for B2 Gold. Michael Gray is a mining analyst, has been very, very good in getting us in front of a few people. And Lance Miller is our Alaska connection. He's the VP of Natural Resources, a geologist, for the NANA Corporation, which is one of the big native corporations in Alaska. Not the one we deal with, but Lance knows how to get things done up there. And since we last spoke to you, Anne LaBelle joined our board. She's a lawyer with an expertise in sustainability, regulatory affairs, and has a good track record of getting projects permitted. If it weren't for the reputation of Darwin and the technical team, we would not have our Johnson Tract project in Alaska. That sits on native land. The native corporation is called Siri Cook Inlet region. They came to our technical team and offered up this project for development. So stewardship, while it's important everywhere with mining, it's incredibly important in Alaska. So we're very pleased to have this relationship with the Native Corporation. Where we are, just a reminder, Johnson Tract project is not remote Alaska. It's south central coastal Alaska. It sits only a handful of miles from the Cook Inlet, which is deep water. It's only about 40 miles across Cook Inlet to a place called Homer, where we can barge our materials. We brought our drills over that way, so it is not remote. Our Timmins project, we've got 3 projects there. We've got 2 large land positions, Golden Mile and Golden Perimeter, that are early stage exploration. And we've got the Munro Croesus project, and that's the sample. The sample that you see on the right is from the Munro Croesus project. Or the Munro Croesus mine, I should say. It was mined out in the 19-teens to the 1930s. And what we're looking for there is the environment that created this incredibly high-grade gold. And to that end, we have been consolidating the land position all around the region of Munro Croesus. A lot of that land was private, it was patented. Darwin has been putting it together so that we can apply modern exploration techniques, or maybe in some cases, first exploration to some of this area. So I will hand it over to you, Darwin.
Great. Thank you, Naomi. Yeah, so the way this is structured, I'm going to spend the front end of my part of the presentation talking about Johnson Tract, and the back end talking about Timmins. Timmins was certainly heavily overshadowed by Johnson early on, but it is gaining prominence within the company, and I think in terms of the market's appreciation for its potential value. But first, what I want to talk to you about is a little bit about the Johnson Tract in Alaska, and give you a little history to native land claims settlement there, because I think it is a pretty unique story, and it's a story that deserves to be told. And it really does set Alaska apart globally in terms of, I guess, indigenous rights and kind of exposure to I guess, the benefits of mineral development. So in the 70s, when they were pushing the oil pipeline south from the North Slope, land claims at that time were unsettled, and it really triggered a settlement process. And in that process, they created 12 different regions and regional corporations that then selected lands. And they selected lands for some for oil and gas, some for minerals, some for timber, some for real estate. And these corporate entities, the shareholders are the indigenous peoples that live within those surrounding regions. So it's really quite a neat model. And so our property, Johnson Tract, was selected by Siri, which stands for Cook Inlet Region Inc. And we are leasing it from them. And so should it go to production, the royalty revenue would flow directly to the indigenous peoples in Alaska. And there's a lot to like about that. I think in a world where people are getting more and more focused on CSR and sustainability type issues, it really is an advantage, and it's a feel-good story as well. The other thing I wanted to point out about this project is originally it was originally looked at as a direct shipping ore scenario, where it was going to be mined and shipped to another mine site for processing. And the last guys to work the property were in the mid-90s, and they had an operation down here in British Columbia at the Premier Mill, and they were going to barge the ore down there to process at that mine. It didn't quite pan out at the time. The economics weren't quite there. They shut that existing mine down because it was under capacity, and this project sat there, and it sat there for about 25 years until Siri approached us. But I highlight that because I think one can look at it now as an option. Our focus really is on growing this deposit and making it much larger and being ultimately a standalone mining operation. But one it is attractive to think that there are other operators on the West Coast that could potentially take our ore, should we not grow it to the size we want to grow it. So speaking to Tidewater, this is just the drill getting barged over to site and all the supplies. It is kind of like a big highway when you think about it being right on Tidewater. This is a photo, sort of a satellite image, stylized, draped over topography, just to give you a bit of a lay of the land. Our claims are outlined in the blue. That barge photo was actually taken right in this channel here, Tuxedni Channel it was called. And you can see it'd be relatively straightforward access to construct a road, about 15 miles of road building into where the camp and the deposit sits. Terrain certainly gets more rugged as you go further inland, but our claims and all the potential rocks with potential are all outboard of that. This is also a project that is polymetallic. While the fundamental value, the majority of the value is in the gold, there is a lot of value in the copper and the zinc. And with copper and zinc projects, you produce what's called a concentrate. And concentrates go to smelters, and most smelters are on the Pacific Rim. So again, being right on Tidewater is an advantage in terms of providing access to those smelting markets. So if you attended our presentation this time last year, you probably remember that some of the drill holes we generated. We've been adding to those drill intersections, and it's produced some dandies, 75 to 100 meters plus of 10 to 20 grams gold with very significant zinc and copper credits to go along with it. This really is quite a unique deposit in terms of the tenor of mineralization we see and the width that we see. And obviously a system that generates this, there's probably more metal around, or at least that's our thesis. So just a view of what the deposit looks like in cross section. Key takeaways here are it's subvertical, it's got great continuity of great grade. And what we're seeing now is this deposit actually has a plunge to it, and we're chasing that plunge to depth. That means as we kind of keep working it down or sort of into the page, it keeps going down to greater depth. So what we did, we acquired this asset, and the first thing we wanted to do was establish what our starting point was. What sort of resource do we have? We knew there was a resource there, but all the work that was done was older work. It was done prior to current reporting standards. So as we went public in 2019, in the fall of 2019, we completed a small drill program, and that teed us up to generate this resource. And cumulatively, between indicated and inferred, we're just under 900,000 ounces gold equivalent. The lion's share is in the higher confidence indicated category, so about 750,000 ounces gold equivalent. And that is made up of gold, silver, copper, lead, and zinc. Over 50% of the value is in the gold. And then the next would be zinc and copper in terms of contribution.
Quick question, Darwin.
Sure.
Sorry to interrupt.
Not at all.
The previous owner or what have you, can you give us a little bit more color on that in terms of how you guys acquired the property? And essentially, there wasn't, much done, but at the end of the day, give us some just backdrop on that.
Yeah, for sure. Thank you for asking that question. So this was really discovered by Anaconda, which was a big copper mining, but they were in a lot of commodities, but they were a real major player in the mining space in the 70s and 80s. Ultimately, things got nationalized in Chile, which was their ultimate downfall. It took a while for it to happen. Long story short, they made the discovery and then they got out of the metals business entirely. The project then passed hands, was at a private hands for a brief period, and then ultimately made it to Westman, who were a mid-tier miner. They had a couple of operating mines on the west coast of North America. And
what year is that?
That was from 93 to 95, or somewhere about there, 93 to 96. It got handed back in the beginning of 1996 CIRI, and all the while it was being advanced on CIRI, like it was all through leases with CIRI, the native corp, who acquired it in, I think 79 or 80. That's when the the land settlement occurred. So yeah, and then they advanced it. They had a resource. They did engineering studies that looked at mining it. They did what was called a PFS at the time. It's probably somewhere between a modern day PEA and a modern day PFS, but a lot of good quality work that was done to de-risk it. One of the big pieces was the metallurgy. There's enough metallurgical work done to know that it's pretty straightforward flow sheet. You float a copper con and a zinc con, and then you leach the rest, the gold out of the tails. No nasties, moderate grind size, and from a mining, how you'd approach mining it. So there's a lot of really good things that were done, but they were very specifically looking at this to supplement the mill at their existing mine, which was under capacity. And so that mine needed more feed to stay alive. And it had positive economics, but it just wasn't positive enough at the time for them to keep the other mine open. They shut it down. They were taken over by a big Swedish company actually called Boliden, and this went back to the native corp. So maybe more background than you wanted there, but long story short.
And how far is that mine? Just curious on that.
How far is it?
Yeah.
So I'll go back to this slide. Whoops, here. It was about 900 nautical miles away, so it wasn't close. They were going to barge it all the way down to here. Okay. That said, once you're on Tidewater, I know of an operation actually in Southeast Alaska, and they ship gravel. No, they're not gravel, sorry, limestone. And limestone's not worth a heck of a lot. They ship it all the way down to the Columbia River, the Oregon-Washington border. So, once you get onto a barge, it's really just a rehandling cost. So there's a few other mines here. There's Greens Creek, there's Kensington, there's other options that are on the coast that you could potentially see this ore going to.
Are you familiar with Rock Creek?
Yes. Yeah.
Okay. Just curious. That's all.
Yeah. There's a nice mill sitting there too. It's all been taken down as well. So
I'll let you go. But thank you.
Yeah. No, thanks, man. Appreciate that. So what we look at this is a great starting point. We're knocking on the door of 1 million ounces. We're not quite there. I think if we cut this cutoff back a little bit, we would be there. In fact, I know we would. And keep in mind, this 4-gram gold equivalent cutoff, that's a cutoff you'd normally see with a narrow vein system that's maybe 1 or 2 or 3 meters wide. We have an ore deposit that's 20, 30, even 50 meters plus in terms of true width or thickness. And that's really what separates this deposit from the pack. There's high grade mines out there, and there's really big, thick mines out there. There's very few that have got that combination of the two. And what that does is it translates to really attractive economics. And so by generating this resource, not only could we establish, the endowment of metal that we have, but we could really talk about what makes it extra special is really how that endowment sits and occurs. And how it sits and occurs is one big thick slug of mineralization that's subvertical, that's very thick, which lends itself to very low cost mining methods. And anybody would want one of those. So, for us, our business plan here really is we feel we've got the ideal mineral deposit. It's high grade, it's thick, that equals attractive economics. It's because it's high grade, it would be a very small footprint underground mine. It has Alaska Native interest, which is, attractive politically and from a permitting standpoint. And we're in a first world jurisdiction that, in an America first environment, we think this is, a perfect combination. So what's our focus then? Our focus right now is to establish the scale. How big can we get this? We have something that may be economic right now. Our emphasis is not focusing on that. Our emphasis is on seeing how big we can grow this, given that it's been really starved for exploration. There's been no exploration for 25 years, and the last guys that worked it were so focused on the engineering. And, in that exploration work we're doing, we're both expanding the known deposit and trying to make new discoveries. And so this is a long section. It kind of speaks to both of those points because we've had success on both accounts in terms of expanding the deposit and making new discoveries. So On this long section, this darker gold, that's, you see this little dotted black outline, that's the outline of our resource estimate. So all those black pierce points, those are all the holes that went into that resource estimate. All the red dots are the pierce points of holes we drilled this year or in 2020 that we now have results back for. The green ones are ones that the assay results are still pending. So first major takeaway is that I guess the extent of the system is now significantly larger, as defined by this dashed red line, which is a much bigger footprint than the original size of the deposit. The other big takeaway for us was when we came into this, the previous workers really felt that the opportunity to grow this deposit was limited. There was a fault structure. They thought the majority of this was displaced. We see now that there's huge potential to keep taking this deposit to depth. It is open. We've expanded it, and we're all teed up to keep expanding it when we get the drills back out there in 2021. The other thing that was new for us was the discovery of a copper silver zone that's in the stratigraphic footwall to the deposit. So this is a deposit that it would have formed when everything was flat lying. It's now been tilted on end, and when it was flat lying, there would have been vertical zonation up. So at that point in time, the copper was sitting below it. Now it's tilted on end, and the copper is kind of sitting out of the page towards us here, and that's defined by, as I say, by this hatched pattern down here. It has really nice copper and silver numbers, lower gold, and a little bit lower total, I guess, grade than the main deposit, but by all appearances, it's going to be a nice add to the resource. It's hanging together as a definite new subzone, and it also is open at depth. It's also telling us something about the opportunity to keep about the geology and the geologic model, and that we may be getting into the hotter part of the system as we chase it down plunge. So really, really happy with the developments. It's it's been a great first year for us. We've learned a tremendous amount about the deposit, and we're currently working with all of the data to develop our plans for this coming summer. One of the other components of our field season last year was we also looked at the regional prospects. So this is a very large property. All the drilling that was done this year was in this red box, and that was done between July and the end of October. We had a program going that entire time. Concurrent with that, we had field crews out doing the old traditional style of prospecting, soil sampling, geophysics. And the objective there was to advance these other prospects to the point that we would be ready to drill them. One of the really attractive features of this property is it's not just a single deposit that we're exploring for. It's a property that clearly has opportunity to host multiple deposits. There's very big visible sort of hydrothermal alteration systems that we can map on surface, and you can see those in the photos shown here. Those are associated with mineralized showings, and there's been very, very little past work. So we'll have news out on that part of the program here fairly soon over the coming weeks, and then we'll follow that up with our plans for 2021, which will include more of the same at the main deposit, continuing to grow that deposit, as well as finding other targets immediately around it, as well as plans to start drilling some of these other prospects that are really quite interesting. So that's Johnson. Happy to take a couple questions there. We can wait till the end, and now I'll switch to the Timmins part of the story.
Actually, quick question for you, Darwin. In terms of Johnson, and you might have touched on this, but are there any other notable exploration and or development projects in the region that you guys draft off of or what have you?
Yeah, right. I would say not specifically that we're drafting off of. You might start to see others draft off of us. We are in a package of rocks. Yeah, I'm just trying to think. I mean, Alaska right now, on sort of a larger scale, Alaska has become really attractive to the Aussies.
Sure.
You know, Australian company bought out the Pogo mine as an operator there. And there's multiple Australian outfits exploring in Alaska. And it's an interesting one. I think a big part of that is the fact that a lot of North American companies have been asleep at the switch.
Yeah.
There's a
And are you guys a part of YMA?
We aren't, no. So it's interesting, you know. So on the Yukon side, there's you know, it's sort of its own deal, but certainly that geology comes across. You know, and there's a lot of good success stories going on in Alaska, and I think there's a lot more, you know, to come out of Alaska.
Okay.
You know, people are most familiar with the really big projects, you know, the Donlins.
Yeah, the Donlins. I was going to ask you on that, because I worked with Nova Gold for years and years, and obviously they put it on to TAC and what have you. But you know, looking at a Donlin vis-a-vis this opportunity, how would you kind of compare that? Because I know part of our constituency knows a little bit about Donlin, and I just want to give them a little bit of an analogy of it.
Sure. Well, there's some comparisons, and then there's some differences. And one of the comparisons is, you know, Donlin is on Native Corporation land as well. And I think when you compare it to other mega scale projects in Alaska, it has certainly got had a much smoother path in terms of permitting and opposition. There's been a lot of support for that project.
Sure.
And I think it highlights the gold endowment in Alaska, and you know, the good operators, which we like to think we're in a similar club that way. One of the differences, however, is, you know, it's a very remote spot. There's a lot of infrastructure costs to access that asset.
Yeah, it's ridiculous, right?
Yeah. It's an incredibly special project. I mean, there's 40 million ounces of you know, 2 grams type material. I mean, it is a amazing project, and but you have to be an amazing project to overcome the hurdles, cost hurdles to develop it. And I think that's where we're a bit different. We don't have as many ounces, but the ounces we have should have very high margin, and we don't have the same access issues. I mean, we don't have a road right to it, but it's a nominal cost, relatively speaking, to access our project.
Got it. Okay, no, and that's you know, a great illustration for, I think, this group that has been exposed to Donlin in the past. So for you guys to be able to make that delineation is, I think, pretty significant. And you know, your ability with infrastructure vis-a-vis a Donlin, which is a nightmare, as we all know, is pretty significant. So, okay, we move on to Ontario.
Yeah, well, thank you. Yeah, for sure. So Ontario, you know, it certainly was overshadowed, or has been overshadowed by Johnson. I mean, we don't have 100-meter intersections of 10 grams yet in Ontario, so fair enough. But it's obviously, you know, it's the epicenter for gold in Canada. You know, between Timmins and Val-d'Or, there's, you know, over 110 million ounces has been produced. Very, very long life mines. And it's a very competitive landscape. And so we feel quite fortunate to have the quality of properties that we do. You know, we have a long history, sort of a corporate history, pre-HighGold, with the Archean gold belts in Ontario, whether that be Red Lake or Timmins. And it's that network and history that allowed us to acquire the properties that we have. So Golden Mile and Golden Perimeter, I mean, they're really very close to Timmins proper. And it's quite a rare position to be able to have such sizable land packages as we have. That said, they're quite grassroots. They're quite early stage, but they have all the fundamentals there in terms of right rock types, but will take more sustained effort. You know, there's a lot of people applying that approach to places much further north and much more removed. We have to have that opportunity much more removed from infrastructure. We happen to have that opportunity in a very well-established camp. I'm going to spend the most of my time, though, talking about the Munro Croesus right now, and I consider it's part of the east half of the Timmins belt, if you will, and this figure sort of highlights that. So Timmins proper is on the left, produced a heck of a lot of gold, 70 million ounces gold or so. As you go to the east, this is an area that's becoming a lot more prominent of late. Company called Manita Porcupine recently doubled their Golden Highway resource from 2+ million ounces to 5.5, and then they acquired another asset here for 2.9. So there's 8 million ounces sitting there. McEwen Mining's Black Fox mine is sitting. We actually adjoin their property, and McEwen himself is actually an investor in HighGold. And that's Rob McEwen, not the company. And so they're taking that operation, which is sort of a 30 to 40,000 ounce a year operation, and they're currently evaluating expanding that to better than 100,000 ounces a year. And then immediately along trend from us is a deposit called Fen Gib. It's a 2 million ounce system that we know extremely well because we've had so much history in the area, and we adjoin that as well and are right along trend from it. So the real story here is, I don't think it's going to take a lot of convincing to tell you that there's a heck of a gold endowment in this part of the belt. Our Croesus property is anchored by, or the core of it, the nucleus of the property, is the Croesus mine, which is a former past producer that produced some unbelievably high-grade gold, gold that looked like this. There's several samples in the Royal Ontario Museum. So we know there was gold on the property, and we know there's big endowments surrounding us. What we have and what we've been doing over the past year is we've been consolidating the land around it, and it's taken a lot of work. A lot of these were old patented claims that date back to the early 1900s. We had to chase down estates and that sort of thing. And this particular property package is now tenfold its size, the majority of it being patented mining claims and mining leases that date back 50 or 100 years, that have seen no work, virtually no work in that time. And so it's pretty exciting. It is earlier stage, but we have gold bearing veins on surface. We have a lot of different settings for different types of gold mineralization. We just did a small drill program in the fall that we had some results out at the end of December. We got up to 190 grams over a half meter. We had another hole at an entirely different prospect that had never been drilled before, where we were seeing, around 10 grams over a meter or so. Really like it. It's early stage, so stay tuned for the advancement of this, but we will be working it. At the same time, our neighbors, we expect to be very busy. So there is a new issuer that will be listing on this Fen Gib asset. So I expect, it's called Mayfair. I expect you'll be hearing them talk a lot in the near term. So a lot of activity in the area. We've got a lot of targets and a lot of history here, and kind of by stealth, we were able to assemble land, which is very, very difficult to do in as mature and established a camp as Timmins. So that's
real quick, Darwin. With regards to Munro vis-a-vis Johnson, CapEx, what are we looking at? Where do you guys allocate in terms of percentage-wise to both? And I'm talking greenfields, but at the same time, that's huge stuff. So, where are you guys at on that?
Yeah, I mean, so what's our market cap right now is about 80 million, probably less. Last few days we've been trading down, but so if we got about 18 million in cash, so take that off the top, and the enterprise value is say 65 million. I think we're undervalued for Alaska alone right now, and I can say that with some confidence. Okay. I've seen, and when it comes to Ontario, I've seen, in my view, Timmins focused explorers with lesser assets that are solely focused on Timmins or Greenstone Gold having market caps in the 20 to 30 million range.
You're not going to name names though on that?
Let me try and
I'm kidding you. I'm
yeah.
totally kidding.
Yeah.
Let's
Thank
be
you.
off the record on that.
Yeah. Anyway, the point is you can easily, attribute 20 or 30 million valuation with what we have just in terms of the land play in Ontario. I think that is not reflected in the share price right now. I think as a shareholder today, you basically are getting Timmins for free, and it's great optionality. It gives us a lot of optionality going forwards. What do we do with it? Do you spin it out? Is somebody else going to want it? Certainly, we have some neighbors that are very active. We first and foremost have a bunch of ideas that we want to test, and we want to build value here with the drill bit. And any success here, you will be handsomely rewarded. I think. It's just, we're blessed with an abundance of quality assets under one roof. And for now, given that Alaska is seasonal, we really like having this kind of the ability to have Timmins as a place we can work year round and keep the news flow going.
Yeah, for sure. But going back to my original question, in terms of the CapEx, what are we throwing into Johnson versus?
Well, I think right now the market is valuing. Yeah, it depends on the beholder, right? I think a lot of people have not been attributing any value at all to Ontario because they were so Johnson focused. I think that will change. And I think going forwards, in terms of how we're going to approach our spend, it's about an 80-20 spend right now. Until there's more success.
Okay. Sounds good. Thank you.
Yeah, no, pleasure. Yeah. So yeah, just to cap things off here, it's really been a great run for us in terms of coming out of the gates. Our timing was very good. We weren't followers per se. We just happened to time things well to list at the start of a good bull market in gold. We've been very opportunistic when we finance, such that every financing has been done at successively higher levels. And we only issued warrants. Well, we haven't had to issue warrants to sell any of our financing since our first go public round. Got a resource out. We've been expanding the deposit. We've consolidated things in Timmins, and that's an emerging part of our story. And we're fully funded to hit things hard in 2021, and that is our plan. We've got great targets in both Alaska and Ontario. And I will hand it back to Naomi if she has any closing remarks.
None here. I just, we've got some time for questions, and if you would like a little bit of a deeper dive into any of that, you can certainly reach us. We're easy to find. Information here on the slide and through any Google search.
And I would add, just as a general kind of overarching theme, I think I have seen in general for projects where you have a field season that is sort of a seasonal field season, restricted to, for us in this case, June to the end of November. Right. Oftentimes when the drills stop, the share price falters a little bit. So, buying this time of the year is usually a pretty good opportunity if you're a value focused investor and have a little patience to wait till the summer.
Especially today, right?
Yeah, especially today. That's right. Yeah, gold took it on the chin today for sure.
Yeah, a little bit. Everyone's down 2%, but let me ask you this. Looking at you guys moving forward, two questions on this. One is, talk to me a little bit about the cash and the last financing and how you guys orchestrated that, and give me a little bit, or the audience, a little bit more detail on that as well.
Okay, well, the last financing was a flow-through financing. It was essentially a charity flow-through where we had one quality blue chip institution that wanted a piece, and so we did the financing. It was flow through, so those dollars will have to be spent in Ontario, but we did that specifically for a very specific strategic reason. It was to ensure our shareholders knew that all of our hard dollars and all of our existing treasury was focused for our Alaska. Because we were acquiring new land in Ontario, we didn't want people.
Sorry, Darwin, and
Yep.
that was non-brokered, correct?
Oh, it was, well, that's right. It was non-brokered, although Cormark assisted us. Did play a role in that one. Yeah. And our senior producer, Agnico, maintained their position. We had excess interest to expand, but we really didn't want more capital than that. And we've been very, with all of our financings, I think virtually every financing has been oversubscribed or certainly had excess interest. And we've been driven by the who the players are before how much money we're taking has kind of been our approach. And, we've had the good fortune to attract some really quality shareholders and be selective and have some control over that process.
And
in
you
terms
said
of finances.
Sprott is involved?
Yeah, this is Rick Rule's fund. So Neil Adshead was really the driver.
Carlsbad Group. Yeah.
Carlsbad Group there, not Eric Sprott himself,
Yeah.
but Franklin, 18th century dynamic. Yeah, they're good names. Merck.
Yeah, great names.
Yeah. We're really pleased to have, their vote of confidence, and it's our intention to put the dollars they gave us to work to create more value.
So quick other question for you. In terms of endgame, looking at this, and, I've gone through this for a long time, and a lot of these people that are on this call right now understand these stories as well. With regards to you guys, how do you see it in terms of the vision, in terms of the end game? Is it an M&A deal, or we're not producing a mine here, correct? And
yeah, I mean, our team's expertise is the discovery process and the de-risk process. We've done it before, and that's where our emphasis is. I'm a geologist first. And I'm about creating maximum value. I think, in my opinion, what we've been able to define at Johnson as a resource is the exact type of deposit that would be very attractive to a lot of different groups, whether it's a single asset operator that wants to expand their portfolio to multiple, or it's a well-established Agnico type company.
Yeah.
I think it is attractive to a broad spectrum. It needs to be bigger for an Agnico to want to own it.
It would seem to me that a mid-tier, a really good mid-tier, would come in and go, "Hey, you guys have done the work. This is fantastic, and let's take a swing at it." So I don't know.
I agree with you completely, Matt. I mean, my job is to not have just one. I want 5 of them wanting it really bad. Have them fight over me. I'm okay with that.
We have another question from Ron in the audience regarding cryptocurrency and how this has reduced the interest in gold. Really, what brings interest back, in your opinion, I guess, coming from Ron in the audience?
Yeah, good question. I mean, for me, I think fundamentally gold never goes out of style. I mean, there's going to be some that don't subscribe to it, and there'll be, there's going to be some that, there's no, I don't know. I won't get into the real nuances of pros and cons of sort of the crypto versus gold. One thing I would add, though, is as a project, we are kind of unique in that we're a gold first project, but we do have very significant base metal values.
Yeah, I was going to ask you.
For some, that's a turnoff, but for me, I think for others, it's a really attractive thing.
Yeah, and with that, credits. I mean, that's, I think, very, very important as well. So, in terms of you're in that region, at least in Alaska, you're dealing with a lot of copper, I'm sure, right?
Yeah. Yeah, there's a lot of copper, which is certainly a popular commodity right now. If you're looking at the electrification and in sort of the energy metals, it's for sure, it's one of the base ones, right? You can't do anything without copper, and so I like how it hedges, depending on the commodities of the day. But you got to think of where gold was and where gold is now, and the profits that the producers are making now are, even if gold drops another $100 or $200, they're still making way more money than they were, a couple of years ago. And
like 7 years ago for
yeah,
a long stretch.
yeah, exactly,
Yeah.
exactly. So
no, I mean, I like everything. I love the story. And I'm a little bit apologetic because my audience is a little shy right now with Q&A. So
no problem.
I apologize to you guys. It actually happens in this forum. I don't know if you've experienced that before, but it's kind of unique. It's weird. But at the end of the day, I love it. And obviously, I think the story is a great story. And I think this is the first time I met you, and this is remote and kind of weird, but at the same time, very impressed. And I've known Naomi for now, what, 15 years, Naomi? At least. We're growing old together, right?
We are, quickly.
But that's okay. That's okay. But at the end of the day, I want to, thank you guys for taking the time, and everyone else taking the time today to participate. Need more questions, guys. You guys are quiet out there, a little bit too shy, but that's okay. And we'll do it again. And thanks again for everyone. Actually, I've got one last question from Dave Kellerman. How much total outlay so far? And then another question. So now they're compiling in, right? What I'm about to conclude. I should have never taken this job. But so we've got.
In terms of what our expenditure is, how much total outlay to date, and or what we plan to?
Yeah, how much total outlay so far?
Yeah, well, we raised 35 and we spent about half of that. There's, of course, of that 35, there's always commissions and fees as part of the financings. But so we, I don't know, we put 15 million or so into the ground. I expect there'll be a comparable amount put in or more this year. So, it is capital intensive, there's no doubt, but yeah.
And then another one from the audience, you said 80 to 20% budget for 2021, but how much in dollars?
Yeah, so we haven't, we've met with
on the projects. I'm assuming
yeah. So we haven't established firm budgets for 2021 yet. We did raise 3.7 million flow through in December. That is earmarked. All of it has to be spent on Canadian exploration projects. So that will all be, we have 2 years to spend that, but I anticipate we would spend that within 18 months. And if we're having significant early success, it may be spent faster than that. I expect we deploy, say, somewhere around 25% of that here between now and the start of summer. And we'll probably take a pause in Ontario and then go back to it again in the fall. We want to take a very measured, kind of staged approach as we get new information and plan our subsequent holes. For Alaska, last year, I think we spent we spent over 10 Canadian. So I don't know which all the dollars we've been talking are Canadian to date. So we'll spend probably at least 10, could be up to 15 this summer. We have 18 in the till right now, with another 4 million of warrants that are 70-cent warrants that expire in September. So you can't guarantee it, but we're fairly confident those will all come down. So, we're well capitalized right now.
Okay, great. All right, I'm trying to think if I've got anything else for you guys, because I know Darwin wants to get back on the slopes.
You don't want to give everyone the impression I'm a ski bum.
No, I'm kidding. I'm kidding you. Now, again, hey guys, great stuff, and great to have you both. And thank you to everyone who participated today.